So much for inflation being transitory. Fed Chairman Jay Powell says Americans will likely feel more pain. And now the Fed's planning an all-out blitz to tackle inflation and hinting at more interest rate hikes. And the former head of the Congressional Budget Office says things will take years, not months, to get better. And progressive Democrat Senator Elizabeth Warren says she fears the worst.
There is nothing in raising the interest rates, nothing in Jerome Powell's tool bag that deals directly with those. And he has admitted as much in congressional hearings when I've asked him about it. Do you know what's worse than high prices and a strong economy? It's high prices and millions of people out of work. I'm very worried that the Fed is going to tip this economy into recession.
Wow. So is a recession indeed coming? Here with me in the studio, MaxFunds.com co-founder and Fox News contributor Jonas Max Ferris. Jonas, does the Fed chairman have a, what did she call it? He has a bag of tricks, or I thought he had a briefcase or something. But
it's a bag when you're being dismissive. It's a briefcase if you're being respectful.
That's right. Well, so they are, during the break, I said, look, they're just raising rates a little bit, but you said a little bit is kind of a lot. Is that right?
It is for them. It is a bag of tricks. They're not using all the tricks, first of all. The main trick they're doing is talking. They're trying to talk down the inflation and the economy. And if you saw the stock market Friday, that part was working because they were scaring people. The actual interest rate increases have been very mild. I mean, for them to go 0.75% over, that's a lot. They usually do quarters over a long period of time. They're catching up to all those months of its transitory talk where they didn't do anything. But the main trick is doing which they haven't really done, is doing the opposite of what they did during COVID, which was create money out of thin air, buy the government debt that was issued to get people the PPP loans and everything else. They can do the opposite. It's reversible. It's not like they printed cash and dropped it out of helicopters. They can actually sell the $9 trillion in debt that they have now from the two pandemics, because one goes back, half that goes back to the 2008 crash.
Who buys it? Who buys that debt?
Bond. So, like, if you go to what they would do is they would sell the bond, the government bond that was issued to pay for the COVID loans. I'm, as an investor, I would buy the bond, let's say, or someone in Japan or China, and then they get the money from the bond sale and they light it on fire. It disappears. You can make it go. It's reversible. They actually, because of that, could end the inflation in 2 months, and they could cause deflation.
What are they going to say, though? If you said you could end it in 2 months, they'd say, come on, we can't do that. Why would they?
Literally,
so if
$9 trillion. If they started to sell it, interest rates would go to 9%, and that's what your mortgage rate would be. And then there'd be no home sales.
Now,
they don't want to do that.
But when I was a kid, interest rates were 16, 17. Am I right about that?
Yeah.
Okay. So obviously, we deal with things differently now, because it was routine for people to be paying their mortgage in the teens, right? Now, what is it? We're down at 2%. That's for the Fed rate, right? But mortgages are still, what are they, 4%?
They're over 5%.
They're over 5%?
That's a big move. It's already hitting the housing market's already falling apart with just over 5%. If we got 7 or 8, or even close to where it was in the early 80s when they had to take out the inflation, it would be a dust bowl. But home prices were a lot lower adjusting for inflation at those. So, like, yes, it was a 9% mortgage, but the house that's $1 million in Miami now, or here, I should say, that would be a very small apartment, was, even adjusting for inflation, was maybe $300,000 in today's dollars. So the price was a lot lower. So and that's the problem. When rates go down, assets inflate in value. Stocks do too.
How is this did? Listen, why did they do that? Why did they make the cheap money during COVID when everybody wanted to go buy a house to get out of these cities that were being shut down? And then they put the rates down to what, 2%, lowest in history? And then the housing prices just went crazy through the roof. And it doesn't help to have the cheap money.
After the completely asinine PPP loans that weren't audited, that everyone ripped off, the reboosting the housing bubble, which took so much money to fix when that collapsed in 2008. If you recall, that bailout, where those homeowners got to walk away from loans, was much more costly than the student loan garbage we're getting into now. It took so much to prevent a depression from happening back then. And what do? We reinflated the housing bubble to levels that, adjusting for inflation, are higher than those levels in many cases in many cities, because the Fed bought mortgage debt with newly created money to support the COVID economy. That part of it was ridiculous, and now they can't really get out of it because they sell the mortgage bonds too aggressively. Mortgages will go to 7%. And wait a minute, I just signed, the ink's still wet on the $600,000 house I bought that was $300,000 a few years before COVID. We'll go back to $300,000. Well, then you'll be underwater. You'll need a TARP loan or whatever the government's going to do to refinance that. This is a mess we got into, and the Fed was too aggressive in the money creation. It was a panic. No one was working, but the reality is that $9 trillion needs to get wound down, but you can't without causing a serious recession. And that is the conundrum, which is why they're trying to talk their way out of it and not sell bonds their way out of it.
Yeah. So they talk, and then people panic. It's as if they raised rates.
Yes.
Then they actually raise rates. And then the next time they come back and they do the talk again.
Yes.
So they're getting away with almost like raising rates half the time and talking.
To be honest, Biden's doing the same thing when he makes people fearful about their economic future. That is disinflationary. You're like, this guy is not going to be there. I'm not going to expand my business.
I love it. Jonas, I could do this all day. I love talking about the economy, but we got to go. Thank you.